Hey miners, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are pleased to welcome back Sue Ennis from Hut 8 Corp to the channel. There's been a number of recent updates that we wanted to walk through in today's video. Before we get into it though, please take a second, hit the like button, you guys. Big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comment section below if you're currently holding shares of Hut 8, your outlook on the Bitcoin mining sector overall, and your price target on Hut for the final few months of 2024. And with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we've got Sue Ennis, head of IR from Hut 8 Corporation, back on the channel. There's been a number of key updates at Hut 8 since our last interview. Sue, always a pleasure to have you on the channel. Appreciate your time and looking forward to today's visit.
Yeah, super excited to be here. Lots to get into and yeah, excited to chat.
Yeah, when we were putting together the question list, we basically had to just do topics because there's such big changes, so much going on at Hut under Asher's leadership and vision there. So first things first, the Bitmain deal. You've designed your own custom ASICs, 15 exahash worth of equipment coming online next year. Can you talk to us about this deal, what it means for the company, and if you can give some specifics as to why you chose to go this ASIC design route?
Yeah, absolutely. So I think one of the things about Hut 8, particularly under Asher's leadership, is that we are not satisfied with status quo. So, and that pertains to how we look at our balance sheet, that pertains to the deals that we strike, that pertains to also on the infrastructure side of things. And so one of the areas on the mining space where we saw an opportunity to innovate, the idea actually first came from in 2021 when Asher pitched Eric Schmidt, and Eric Schmidt said, you're pitching me mining. Where the hell is the institutionalized rack design? Where are the blades? Like you've got these shoe boxes that you're shoving into chicken coops. And so that sort of got the ball rolling with Asher in terms of, okay, wait a minute, the form factor needs to evolve here if we really do actually want to make this an institutionalized and scalable business across the entire industry. And we've had a really close relationship with Bitmain for years. And so we pitched the idea to them that of the idea of creating this U form factor, this traditional HPC data center U form factor to facilitate up to 180 kilowatt densities of cooling. And Bitmain was down. Bitmain also agrees, as we do, that the future of this industry is on not staying status quo and also on cooling, whether it be AI, whether it be Bitcoin mining. Cooling is the key to success in either of these iterations of compute. And so that's how it came about. And I think what's really unique about this deal is it's going to within 6 months of energization, and we plan on bringing this on in the first half of 2025. We have a call option to purchase those machines. And so the benefit of that is, number one, it gives us a ton of flexibility. Number two, it reduces time to energization in the sense that these machines will already be plugged in. And yes, we're hosting them from Bitmain, but we can flip them over to self-mining purposes for us. But if we decide that perhaps the economics next year don't make sense, we're still making north of 120 million in revenue on this deal alone in the coming year. And it's an 18-month contract. And so there's lots of flexibility baked in here. And yeah, we're really excited about it. It's about 57% margins or so. And yeah, we're really, really pretty jazzed about it.
And that's interesting. 57% margin is what, the current Bitcoin price?
So the margins on the actual contract. So we're charging about 7.5 cents per kilowatt hour, and our base power rate is 3.2 cents across our portfolio. So we're pretty excited about the margins on this hosting deal.
Okay, that's interesting. And I mean, obviously, go back 3 years ago, and Hut was one of the darlings of the self-mining world in terms of one of the biggest mining companies back in those days, even bigger than the likes of Riot and Marathon. Obviously, now we look at your updates, and you've got an enormous amount of power available, but the actual power that's provided for self-mining probably represents just under 10% or about 10% of your total power. So from a perspective from the retail investors who are keen to see obviously self-mining, they're all behind that. And, you know, we know there's margins in hosting, but there's no margins like self-mining margins. Where
Yeah.
do you see that business sort of start to get some traction? Because we've talked about this on the podcast this year and in previous years. And it's like, yeah, we'll be announcing shortly. We'll get some machines in, but I know there's an option post this to buy machines. But what's the plan in place for Hut at the moment?
Yeah, so the way that this Bitmain deal is structured is it could potentially be 15 exahash that we could flip over into self-mining within 6 months of energization. And obviously we will exercise that option if the mining economics make sense. And again, we obviously are very bullish on mining, but having that call option baked in. So that could be an extra 15 exahash within the first half of 2025 or within 2025. Plus, we are also upgrading our existing self-mining fleet. So we're at about 4.8 exahash right now of self-mining. If we upgrade it to latest gen infrastructure, latest gen rigs, that would go from about 4.8 to about 7 exahash. So you'd be looking at a potentially having 22 exahash or so of self-mining. Potentially, again, this is not disclosure, not outlook, but if you want to look at the art of the possible, potentially within 2025. And then on top of us having our HPC business, us ideally having closed this gigawatt of power under exclusivity that we're working to close. So there's quite a few catalysts for growth here with respect to, you know, where Hut and what Hut could look like in 2022. But to answer your question, there is an art of the possible of around 20 to 22 exahash of self-mining.
Yeah, and another point that you mentioned in that early part of the first question was about cooling being very important. And not long ago, we had Dan Cott from Russo on the actual podcast to talk about immersion cooling. I mean, what type of cooling are you referring to? If it's immersion cooling, what size of your power would be utilizing that type of technology?
Yeah. So it's direct liquid to chip cooling. And for those in the audience, I'm sure a lot of your audience knows about this, but water is something like 3,000 times more effective at removing heat from chips and being able to maximize density within a rack versus an air-cooled system. And so the initial rollout of this design that we did with Bitmain will start at that 15 exahash site. But is there a world where we white label it? Is there a world where we, you know, again, employ it at all of our sites? For sure. That's within the art of the possible, but it's going to start at that particular site, 205 megawatts, our Canadian break site, where that 15 exahash or Bitmain is going to get stood up. We're going to start there.
Excellent.
Yeah, this is really exciting to hear, Sue, because as Anthony's alluded to, we've been looking for this self-mining update for quite some time. And I didn't realize the element of optionality you have here with that full 15 exahash that can be flipped one way or another. This, especially in light of what we're seeing with Bitcoin prices moving this morning and this week. So definitely a lot of flexibility there. It sounds like a great path forward for Hut 8, whether you go on the hosting route or the self-mining. Now, the next topic we wanted to get an update on here is the AI itself. So you talk about the Highrise AI deal and this new GPU cluster in Chicago. So I wanted to get some details here because you guys are making some major strides on the Bitcoin side of things, as we just talked about, but you're not taking your foot off the gas on the AI side either.
That's right. Yeah. So I think here's how to think about Hut's business is we've got 3 layers. So we've got the first layer, which is power and development. So we acquire as many cheap megawatts as power as possible using Bitcoin mining as our tool to create a power portfolio of scaled power assets. That's layer 1. So you can sort of look at that as like the operating system of our business. Then the next layer of our business is the infrastructure layer. So that's where we're creating Bitcoin mining infrastructure, AI data center infrastructure. Maybe one day it's green hydrogen infrastructure on top of that power layer. And then you can look at that as sort of like the app store. And then the third layer of our business is the compute layer. So that's where we have the hosting contracts. That's where we have the GPU as a service model. And you can kind of look at that as like the app store of our business. So those are the 3 different layers of our business. And they have 3 different return profiles, 3 different counterparties, 3 different levels of risk. And so this Highrise AI business that obviously sits in that third in that compute layer. We're really excited about it. We forecast 20 million in ARR over the next it's a 5-year contract. And we started with co-location because we knew that as we continue to grow the second layer of our business, that infrastructure layer, that if we're going to continue to pursue these different iterations of compute, and right now it's looking like AI data centers and GPUs are the next sort of highest use case on Electron. We wanted to make sure that we understood how these chips needed to be cooled, what could go wrong in installation, how they needed to be managed. And so co-locating these chips really helped us get a better sense as to how this compute and how these chips worked in order for us to continue to maximize value on that second layer as we build out that infrastructure. So we're pretty excited about it.
Awesome. We were privileged in June to go down to the Denton facility and listen to the Core's update on their contract with CoreWeave. And since that date, we've seen a number of miners. I mean, you guys and Hive and Iron and Bit Digital were already looking at the HPC space. I mean, you bought those 5 data centers a couple of years ago. But in terms of that one big deal that we've seen on the market, the one that pretty much every miner would love to have in their bailiwick, we're waiting for the next miner to announce the deal. Now we've just come back from Amsterdam. And Zach was asked the question because CleanSpark at the moment are looking like the only pure play Bitcoin miner out there. And he said he didn't expect another deal like the CoreWeave one to come out. In terms of the style of like the HPC contract you'd be looking at in terms of the power that you've got available, what would you be considering in terms of a strategy? And we've got a number of miners using different strategies. We've got Bit Digital who use their strategy. Iron have got a different one, Hive. And then you've got the Core Scientific. How's the phone ringing at Hut 8 at the moment to determine where do you think you'll be positioned going forward for HPC?
Yeah, so we have disclosed that we are in active conversation with hyperscalers. I think one of the differences, though, between a traditional hyperscaler and a hyperscaler like CoreWeave is they're sort of more of like the newer, scrappier hyperscaler. And what I mean by that is, as you and your audience know, CoreWeave was actually mining Ethereum like 5 years ago, and they were mining Ethereum in some of Core Scientific's facilities.
Absolutely. Yeah.
So there was sort of some synergies there and relationship. And also, again, they are still more like a scaled startup, I would argue, in the hyperscaler space.
Yeah.
AKA they can probably move a lot faster. So when you're dealing with traditional hyperscalers, though, and again, we're very much in conversation with the top five or six hyperscalers, it is somewhat like dealing or working with the government in the sense that there are multiple silos of parties that need to be involved and sign off, but need to have consideration and a voice at the table. And so that it's just a longer sales cycle in general. They're also not used to moving as fast as I think they've ever really had to in relative to where they need to move now. Because this is extremely unprecedented demand for power that's come sort of out of nowhere, where there was like a 10-year period where demand for power grew by like 0%, and now it's gone up to 2.8%, right? So this is somewhat unprecedented, aka there aren't a lot of frameworks, we think, internally with hyperscalers in order to sort of pivot fast and make decisions extremely fast in this space. So there's longer sales cycles than I think we're going to see with CoreWeave. We obviously think the economics on the Core Scientific CoreWeave deal are super interesting. Probably not going to be as sexy if you sign a traditional hyperscaler, but in the same ballpark of Hut would probably, we do like the idea of a more CapEx light model, doing a financing option, and obviously a hyperscaler deal is highly, highly financeable.
Less risk.
Yeah, much less risk, stickier contracts. So yeah, that's
healthy
what
profits.
Exactly.
It ticks the box. I mean, this isn't. I mean, if you just sort of like using your experience, you've been experienced longer than most of the people that we speak to. But I mean, do you get a sense that somebody's going to announce something very soon? You get that feeling yourself, Sue, do you?
Definitely.
I mean, we've heard from miners, 6 months ago, even before the call, we were saying they were they've got the power in play, and and yes, I think miners want things tomorrow rather than maybe some of these HPC hyperscalers look at 3-year plans. They're not looking at just now; they're looking for the next 3 years, maybe 3 years after that to develop their requirements.
I also think one of the things that investors often ask me is who's going to get there first, who's going to sign that first deal, that next deal first. And for us, really, we think like rising tides lift all boats, because one of the worst things for the mining industry would be if someone signs a deal next, and then they can't get it done, or the core scientific deal doesn't work out. We need everyone to do a good job at executing on this in order for us to continue to attract this demand. And so we definitely think there's enough demand to go around to all of us who are pursuing this strategy. We don't really think there's going to be like a winning racehorse. We think that because again, based on our conversations with the hyperscalers, this isn't an evolution in compute. This is like a revolution in compute. Like we are just in the beginning stages of AI. So yeah, I mean, I certainly hope that we start to see more deals get announced and closed and off the ground and running.
Is there a point at which you think actually the pure play Bitcoin mining is the way forward? I mean, we're seeing some miners now not even given growth strategies for next year in terms of hash rate. You've got options to grow, so you're keeping your cards very close to your chest as to which way you're going to go. But do you feel that? I mean, Sam Tabar says if the Bitcoin price gets under 30,000, my margins equalize on Bitcoin mining. Then that's a long way from where we are today. Even though we've had a bit of a rally this week, we're still literally half that amount. But where do you see the Bitcoin price need to go before actually I think, you know what, we've passed the HPC side now, we're Bitcoin mining is the way forward?
Yeah, so we haven't disclosed a particular target price, i.e. that we would target in order to flip over to that self-mining option with the Bitmain deal. But again, that optionality is baked in. So we really like the fact that the deal is structured so that regardless of sort of where the price of Bitcoin is going, we've effectively locked in $120 million in revenue for next year. But then that ability to switch over to wherever Bitcoin mining margins look particularly sexy within an instant. Like we don't have to wait for the machines to get delivered and energized and plugged in. They're already going to be energized and plugged in. Plus upgrading our self-mining from 4.8 to 7. Again, we do think optionality and flexibility is the name of the game here as we pursue the stickier AI side of our business.
In terms of that Bitmain deal, then, I mean, you're not buying the machines, you're just hosting the machines.
We're hosting the machines right now, but we've got the option to buy the machines and self-mining within the first 6 months of energization.
So, that's the point I'm coming on to. So the fact that you're hosting these machines, you've got a very cheap energy rate, you charge a hosting fee, you're effectively going to bring in $120 million, irrespective of what the Bitcoin price, whether it goes to $1 million of Bitcoin or stays at 65,000, your revenue and margins are fairly fixed at that point in time. But if the Bitcoin price rallies, you then think, actually, you know what, we could do far better by moving to self-mining and getting a bigger margin.
That's right. We've locked in a floor and then have call optionality on the upside. So
no, I mean, the fact that contract delivers, a great margin is obviously based on the fact that energy rates at the moment are fairly good from a market price position. And we're seeing even miners in Texas achieving greater benefit by going market rate than going PPA in terms of value.
That's right. Yeah.
Yeah, very interesting deal, Sue. Appreciate the details there on the hosting, the self-mining, the AI. The other bucket or topic we wanted to talk about, and you actually alluded to this earlier, saying Hut 8 has taken quite an innovative approach to balance sheet as well. We've heard Asher talk about some of the unique ideas you're leveraging there. You've also taken a relatively big bite out of debt recently, I think $38 million repayment. So we wanted to get an update there as well. Balance sheet strategy and thinking or approach as we close out 2024 here.
Yeah. Again, we don't have an ATM stood up right now. I think we're one of the only miners in the space that doesn't have an ATM stood up right now. And that's not to say that we would never stand up an ATM, but again, Asher takes a very, very thoughtful approach to capital allocation because we believe we have many different levers that we can pull versus just announcing press releases or putting out press releases and then pumping an ATM into the market the next day. There's project level debt financing. We've got a stack of 9,000 Bitcoin on the balance sheet, 5,000 of which are unencumbered, which we can pull working capital from. We could potentially sell some to fund the business. Not saying we're going to sell any, but I'm just saying there's a lot of optionality here with Anchorage. So we had 38 million of debt with Anchorage, and they actually elected to convert that debt into common equity. And part of that is because they are intimately familiar with Hut 8's business. We've been working with Anchorage for years. And I think that they have been seeing some of the moves that we've been making in the market under Asher's leadership. And so they were incredibly bullish and they were open to converting that debt to equity, which obviously improved our debt to equity ratio, which I think is now at like 0.41. So still very conservative. And Asher's gonna continue to get, sort of find creative ways to improve that capital structure and make sure we keep growing this business.
Just to clarify, on the ATM point of view, I mean, Hut 8 Corp that they merged last year. I'm assuming you have to wait 12 months before you can actually apply for an ATM, or do you
That's
still
right.
get reserve rights under the previous company? No.
No. You do.
So even if you wanted to have an ATM, you couldn't have an ATM until your first 12 months is up, and then
That's right.
effectively that then is the period that you can then start to plan an ATM for, which is, I mean, that's probably imminently getting closer, isn't it?
Yeah,
That date.
but again, I think just philosophically speaking, how Asher looks at funding this
Mhm.
business is he's extremely dilution sensitive. And it's, and if there is going to be a dilution event, it needs to either be a super strategic partner who almost becomes like a part of the business, like a Co2, and Co2 has been insanely helpful with us. Asher's probably on the phone with Co2 like once every 2 days, just talking about ideas in the markets, making introductions, or getting introductions, etc. Or again, like dilution in the spirit of obviously substantial growth. But again, there's so many different levers that we can pull, which can still ultimately return shareholder value without having to just dilute and pump shares into the market. Like there's a lot of different sort of ways to grow this business, and we're very, very mindful of that.
That's it. I mean, the timing of this conversation is interesting because I put out an article yesterday about ATMs for Compass Mining, and my next part of that article is about how some of the miners have used ATMs to grow.
Yeah.
Now, I know that some of the Canadian miners haven't used the ATM as much as some of the American miners, and
Yeah.
then, or even the likes of Iron, who sort of like the last couple of years have used it to great advantage, and CleanSpark especially to great advantage. I mean, Marathon and Wright were the first two to really use that lever, as you call it. But the growth of those two, Iron and CleanSpark, in terms of where they've come from over the last 2.5 years is clear to see. Yeah, I mean, CleanSpark have effectively sold the company 5 times in terms of ATMs, but you look
Right.
at the size of the hash rate that's produced in terms of 30 exahash from something like 2 exahash. That's a 15 times greater hash rate than they had 2.5 years ago. So,
Yeah.
but shareholders, as soon as they see ATM and dilution, they run for the hills and say, this is not what we want to see. But I suppose it's striking a balance between, using an ATM to really grow shareholder value in certain instances, rather than just using ATMs to pay all your bills and
Exactly.
not really get that value in the long run.
Exactly. It's striking that fine balance with, again, return to shareholders in mind. And Asher's extremely passionate about that. So yeah.
I've got a good question for you. I think when we got Ad Asher on earlier in the year, he talked about judge me in Q3. So now we've gone past Q3. So how do you judge Asher's performance since taking over as CEO this year
I
for Hut
mean,
8 and how things have delivered over that period?
yeah. So I mean, I think one of the things that hopefully we're going to be talking a little bit about on earnings call is Asher, in my opinion, really has done what he said he was going to do, which was clean up this business. So we went from having an undisclosed power price, and you can make your own assumptions as to why that was, to now 3.2 cents per kilowatt hour across the entire portfolio. We retired inefficient sites like Drumheller and brought on efficient sites like Salt Creek. We closed Canadian Breaks, 205 megawatts in Texas. We established a partnership with Co2. We closed the Bitmain deal. We retired the Anchorage debt. The guy does not stop, and he says what he does what he says he's going to do. He said he was going to clean up this business to set us up for success. We've already got the path to potentially 22 exahash of self-mining with this Bitmain deal and the floor locked in of north of 120 million bucks. Those are just some of the examples of things that Asher has done. And what I'm excited for is to give you guys in the market more insight into this power, this gigawatt of power that we're working to close. And I really hope to have updates for you guys soon, because obviously that would be some meaningful uptick in some of our initiatives in the AI space, hopefully. So yeah, I hope to come back with some more meaningful updates on that side too. But point is, to wrap that up, Asher says he's going to do something, and then he does it. So
yeah, it's certainly a good list of plaudits for Asher this year, and yeah, no, really, really good.
Yeah, just listening to that, Sue, it's obviously evident Asher knows what he's doing, and it has been really great for us to watch this all unfold and this clarity come to the business. The overarching theme I've heard today is optionality, flexibility, not only from your revenue side of things, but also in terms of how you guys move the business forward. So that's awesome to see in a industry that we know is so volatile like this, giving the management team those levers to flex in and out at will. I'll give you an opportunity to close if there's anything else we haven't touched on, but I feel honestly, Sue, we've covered quite a bit here today, and Anthony and I are both very excited with what we're seeing from Hut 8.
Yeah, really excited to come back here and looking forward to chatting after earnings. Earnings is on November 13th, so about a month away, and hopefully we'll have some more and exciting updates for you after then.
And we'll fill the school report in then for Asher once we see those earnings. Then.
Yeah, it's looking pretty good though, so tell him not to worry.
We'll
most definitely have you on. I think we already have you scheduled post earnings, so looking forward to that, Sue, and all the best to you and team. Thanks for making the time. We'll talk to you soon.